What's going on, guys? Gabe with Review Dork, and this AMC video is going to be a little different, but very much the same. You guys follow me, you know I'm a straight shooter, and you know I'm an advocate for transparency in the markets. Now, let's talk about AMC stock first, and then we're going to get into this dialogue, and hopefully you guys follow what I'm saying. So, today, we saw AMC break out in the morning to 44.44, and then we saw retracement breaking below support of 41.90, closing currently at $40.80, down 5.18%. What it's doing after market or after hours, we take it with a grain of salt. However, there's a couple of things that we need to look at, and we're going to go into the daily here. And we see AMC being magnetized back to this level of 41.90. And we also see that the RSI has pivoted. Now, we talked about RSI needing to maintain strength above 50 to continue its trend. Ideally, what I would like to see is a reversal on this pivot as well, as currently the MACD is trying to find itself. And, you know, that's on us. So I'm not going to go into the SEC report. We all know it was rather disappointing. For the past 10 months, we have acted in unison, in synergy, believing that we have the shorts trap. And the game hasn't changed. We look at Ortex data, and we could see short interest still elevated at 16.61%. But here's the thing. Whether short interest is 16.61% or 0%, we have to go back to the basics. The name of the game in the market is supply and demand. Let's talk about Gary Gensler. If you believe that some white knight was going to save an equity, you need to take your fairy tale ass on over to Disney and invest in Disney. It's not happening here with AMC. I find it kind of contradictory that a community that will freely shout the word shill would actually have the expectation that Gary Gensler would then go ahead and commit career suicide over two equities, AMC and GME, a collective worth at or about $35 billion. The total market is worth in excess, I believe, $49.5 trillion. You could go ahead and fact check me. Do you really believe that the SEC is going to compromise the optics of what is perceived as a free market globally when we have hundreds of billions of dollars being infused into our markets over two companies? Do you really believe that? You really believe that Gary Gensler is going to commit career suicide and disenfranchise himself from the elites for the sake of driving a point home to save an ape movement? No. I've always said I focus on what's in front of me, and I focus on what is on the chart. DD is not going to facilitate a squeeze. News catalyst is not going to facilitate a squeeze. Fundamentals not going to facilitate a squeeze. We facilitate the squeeze. But we're doing an awful fucking job. Everyone is so caught up with the short interest number, and no one's really paying attention to this number here, the turnover rate, 10.17%. And I've always said that in order for this number to go down, we need to take more shares off the table. People can't trade if there aren't shares to trade. Now, I know some of you are going to go and jump in the comment section and say, hey, Gabe, but what about the synthetics? What about this? What about that? Fuck the narratives. We need to stop making excuses. The way we win this war is with our money, period. That 10%, that subgroup of individuals who have no allegiance to the ape movement, no allegiance to the stock or the company, they have allegiance to money, and they're fucking killing it. Now, let's go to another chart here. What we see here is that AMC made a push to the upside here, this trend line here. And this was at or about the $44 mark, and it got rejected. It's then going to bounce down into this wedge and then retry once more. You know who's making money off of this? The institutions who are literally day trading. The big guys, the whales who are coming in, buying 30, 40,000 shares at a time. AMC goes up $1 or $2. Guess what? They're making 60 grand a day. How do you say no to that? That's what pro traders do. Yet we're sitting on the sidelines like sheep, bitching and complaining to the SEC saying, do your job, when we should be doing ours. And that is buying more, holding, and buying again. Listen, as a kid growing up, my stepdad was pretty fucking hard on me. But there were some life lessons I've learned in that. And I'm sure you guys have heard this life lesson as well. If you want something done right, do it yourself. You want the markets to take notice. You want these guys to take notice. Then you have to play, unfortunately, by their rules. As retail traders, we are the equivalent of being the new guy on a job, but yet telling our managers how to do their fucking job. That just does not work. You will get ousted simply because of status quo. And this is all about status quo. There's a lot of money to be made with this, especially when this does squeeze. In the interim, you do have pro traders that are making an absolute killing. So now my question to you, are you apes or are you sheep that are enabling these whales to simply make money on the swing day after day because it is that fucking obvious? The shorts are in it to make money. The whales are in it to make money. It's time for us to stop trying to be the voice of change and be the force of change. And you could only be the force of change if you stand by and you remain highly convicted in the stock and you buy more. There is no other narrative that fucking matters at this point. The SEC doesn't care about our DD. The SEC does not care that we may actually be right. All they're trying to do is maintain the optics of the free market, and that is it. It's optics. It's an illusion. I think it's time we hit them where it hurts with money. This is Gabe. I'm signing out. You know what to do. Like, share, subscribe, comment down below. Peace.